Good day. Ira Epstein of Linn Associates with your financial market wrap-up, and this is for Wednesday, and we're at the 10th of March, 2021, about 5:30 in the afternoon. Beautiful day in Chicago. Snow's just about gone. There's still some on the ground in the shaded areas, and yet it was near 70 degrees today. Problem is we're getting 50-mile-an-hour winds through the city. Cold fronts coming in. We're going right back over the next 4 or 5 days to much more seasonal temperatures, then we'll come back up. Remember the poem, March comes in like a lion, goes out like a lamb? I had to all do that. I want to remind you, if you like these videos, do me a favor, hit the subscribe button on YouTube. You're watching it there most likely. Do that. It helps us with the algorithm that puts us in more sites. That makes me keep doing these. It's really that simple. I have paid subscribers that do it different. They're on our website, so that I don't tell them subscribe to anything. They're paying to subscribe already. So let's talk about the market. Was it so hard to figure out today that we were going to have an update? Let me think about it. There was an event today that probably was going to be bullish. Oh, I forgot, the COVID-19 relief bill. Did anyone think it wouldn't pass in the House, which has the majority? It did. And it went along the votes you would think it did. Basically, I think there was one Democrat that did not vote for it. That was the last vote I saw. But it was party lines. And the majorities with the Democrats, so it won there. President Biden, I thought he was signing them out. I just read a report that it could be Friday, but it's going to be signed into law before the 14th when all the other parts go out. There's some trickery that I heard going on, and I was watching Larry Kudlow on Fox, and I didn't realize this. At the very last minute, Chuck Schumer snuck in that if a state or a city, a municipality takes money out of this plan, they cannot lower their taxes. There's got to be more to it than that. But whoa, that changes things, because what that does is it gives them this money. Many of the cities did see a surge in taxes. I know you wouldn't think that's the case. Read, and you'll see that I'm not wrong on that. So what are they going to do with that money? I guess it's more programs. I don't know. A city like Chicago needs money desperately to pay off what they're getting. We're going to get about $7.5 billion out of this. Sounds like a lot of money. Do you know what our pension liability is in Illinois? $141 billion. Okay, you ever hear the word pension reform? So we look at all this. The stock market's still carrying through early tonight. Metal market's up. Probably means the dollar's a little bit lower, and stability in the bonds and the notes. We saw today the 10-year auction go off. I was watching Rick Santelli on CNBC. I've known Rick for decades. I know him real well. And to make a long story, he rated it D+, C-. I always get a cast. I love him as a character. And, you know, Rick was right this market for years. You know what he told me? He said, Ira, they ain't making any more stock. It's only going up. He was right. But you look at all this and you can see the game plan that is there. When you take a look at the S&P and you see where it's at, you're still in a bull market bias. You haven't lost that in any manner. You're up for the week so far with the early trade tonight, which is Thursday trade, about 168%. Okay. When you look at where the market's at, what have I been telling you the past several days? I said, you're going to fight a battle if you bounce here, and you're bouncing to get through this. This is going to be hard resistance to overcome. If it fails again here, that could be problematic for the market, because the way the chartists will look at it will get ugly. So they want it to be able to penetrate that. That's important to them. Did the market do anything today to help? Yeah, it did. Okay, I still have these arrows pointing down. Do you think that's right? No. You can see you got to 39.16. This high was 39.12.5, if I'm right. 12. So now you actually have a pattern where you'll have a blue line pointing up and that red pointing down. You're no longer in the downtrend. I corrected it for you here. I wanted to show how that works. So you've got lower low, higher high. The bias is up because the market is over the 18-day average. So I've got no trend because I have a lower low, higher high. I have bias up. I have a Bollinger Band that comes in at 39.61, but that'll get the market through that resistance that we were talking through right here. So I'm wary of that because that could set the market even higher. You know, the Bollinger Band will be resistance, but it could set it even higher over time. To the rescue could be that the market's already overbought. So I have an overbought market. I define overbought as either of the numbers. They're called a K and a D. The red is the K, the blue is the D in the slow stochastic. If either number is over 70, they're overbought. You have that. I have an overbought market. On pullbacks, it should see support around the 38.70 level. If it advances much, it could get to the upper Bollinger Band and you're not trending. When I look at the Nasdaq, you are still in a bear trend with divergence. Notice how the market is bouncing right here. It is correcting, present tense, correcting an oversold condition. The flip-flop of overbought is if either number is under 30, the way that I teach charting. So I have an oversold market, downside bias. The difference here is I do have lower highs and lower lows. It is still in a bear trend. The support began against the combination of the Bollinger Band 100-day average. Yeah, you slided through it, and then you came right back. These were the easier trades. Sometimes you don't get to the Bollinger Band. You have to use other products in the market. There's other moving averages that I use. I never show them in these videos. They're in my subscriber videos in the morning, and the subscribers know what I'm talking about. When we come to the Dow, well, this sliced right through everything. I mean, through everything. And at the same time, it turned the trend up. Higher lows, higher highs. So at least you have that. But now you got a warning sign too. What is that? You're overbought. Number two, you have an outside day up. Here it is. If you take out the low of an outside day up, number one will change the placement of the swing line, but number two, that puts into play the lower moving average is an objective on the market, and that would be back to 31,485. What are the odds of staying over an upper Bollinger Band, which is this black dashed line? Only 5% of the time. And the market is right now at 32,316, which is over that Bollinger Band. I'd be a bit cautious right here, is in other words, the statement. Overbought at the Bollinger Band. Is this certainly a new signal? Just jump in to go? Not the way that I teach charting. In the Russell, this market too negated the downtrend. So let's give this is important. You're no longer in some of these markets, like in the Dow in that slope to the downside. Looking back, you will be able to say it found its footing in this area on both the Dow and in this chart. Not the Dow, the S&P. And you got the higher high, lower low. That's important, okay? So I think we finished a wave off the interest rate hikes that spooked the market. The question is, can the markets now run and put in new all-time highs? That is really what the question is. In the VIX, your go signal all day has been that the market's under pressure and it got back under 2245. So I really should have taken this arrow and have it pointing down. You're not trending. You have a higher high, lower low. The market has been unable to hit the lower Bollinger Band for a long time, about 6 months or so. That's important. It means it doesn't get on the downside to the point where people are just abandoning their idea in its full risk-on trade. You're not getting that. We'll see if it changes at some point, but I haven't seen it do that recently. In the 20-year bond, you never did embed. You just got oversold and you're correcting, but you're in a full-fledged downtrend still. You could rally all the way to 159.18 and still be in that. I keep putting 20-year bond. I keep forgetting it. I'm going to fix it before I do anything next. In other words, I'm not going to close these charts when I finish. In the 10-year note, you have a rally. If we take a look at the market, let's see what we have here. You've not been embedded. You can see that. Both numbers aren't going sideways under 20 for any series of days. So you have an oversold market that gets up, Probably runs into one of those key averages that I've been telling you about. There is another one, and it slips back. We'll see what happens. That's about the only way I can describe it. Dollar index, okay. Market looks to me like it's on the verge, if it's down tonight, of losing the embedded reading, where if it stays lost, and, just because it loses it on the opening doesn't mean it'll do it. You got to give it some time. 91.21 could be the downside target, wherever that average is. And the flip-flop might happen if you were embedded in the euro. Are we embedded? You cannot count tonight. So you got to go to Wednesday, both numbers under 20, both under 20 on Tuesday, not on Monday. Just an oversold condition. Could they embed today? Yeah. A down day today will embed it. So embedded's real important to me. Let's assume it doesn't embed and it wants to rally. Where do you think the resistance would come in on the chart? If you can't say the combination of these two numbers, you're not much of a chartist. I'm assuming you are. That's where possibly we'd get that bounce to out of this market. So something to look at. British pound, it's not trending. This was that fabulous run that this market had. It's consolidating those gains. This is not a chart that's over to the upside. It's also, if you read in the paper, the Brexit has caused a lot of issues for the UK in terms of what's being released to come into the country out of the European Union, and lots of fights going on about that, but that's to be expected. I think you're in a basic consolidation pattern. What have we been saying on Bitcoin each day? I know that in my morning subscriber video, I said the odds favor this market's going back to the upper Bollinger Band. I said it again this morning, and bingo, home run. It doesn't get me anything, but as a chartist, love it. And now I think the market doesn't have to run here much right now. Now it's got to figure out what to do. It's nowhere near embedding, overbought. I think the pros are taking money off the table. Brent versus WTI, away you go. That Brent is just powerhouse compared to it. And you have higher lows, higher high. Market has corrected an overbought condition. It's not acting bearish in any manner on this chart. Still in a bull trend. April WTI corrected an overbought condition. Not acting bearish at this point at all. Rebob gasoline lost yesterday. The embedded reading, I think it did. Let me see. Day before. I knew it did. A lot of this is from memory. On Tuesday, it lost it, but it didn't close under 79. Now, I've refined where I think when you lose an embedded reading, you come out in the last 3 minutes or so of trade. And it is no longer under 80. It's really under 79. I don't mind telling you that. The gamble is, unless it's up the next day right away, you got to be on your toes and be able to come out of that market. And as you can see, it opened, and within no time at all, it was okay. Whew. And today you're getting a little bit of that. Now, it's a first warning sign too. It's a sign that, okay, this is an area that maybe, just maybe, we're ahead of ourselves. Resistance 210.49. Lose the embedded reading now, I think you're going to go down then. Nat gas, okay. What's the market doing? Well, you cannot count today because it's only one, we're not even an hour of trading yet. But you can count all of Wednesday, both numbers under 20, Tuesday under 20, not so on Monday. You need today to be a down day to get the embedded reading. We'll see if the market's capable of doing that. I talk about this and I refine it a lot more in my subscriber video. Now, what I can do in that video, unlike this one, is I can say, I want you to buy it here. I think you should do this. I think you should do that. Here's your stop. But what I do realize, it's not about me. I'm explaining in that with all the tools I have on every chart what I think you're looking for when you're trying to figure out for yourself. Is this a bull, bear? I want to be a buyer. I want to be a seller. What is Ira thinking and why? That's what it's really about. It's not about my track record. It's about helping you analyze and figure out the things you're looking to do. And that's the goal of it. I start you off with the news out of Asia, Europe, and America at 5:40. I'm telling you what's coming out in the day's reports. I cover the markets in this exact sequence. If you go to the website, there'll be a scroll bar, and as you pull it, it'll say currencies in big name. interest rates, get you right where you want to go. Because some people don't want to look at a 20-minute video every day. They want to just get where they want. Does that mean you can't take your iPhone or your Android and scroll right there? Nah, you can do it, and it works that way. So I think you'll find that works neat, but you don't get the big name showing up. We tried, and we just can't get that technology to work the way that we wanted it to in it. Sorry, I've tried, believe me. It shows up the wrong way. So you get all this, and the idea is to help you with your trading. What does it cost? Because there is a cost to it. If I'm putting out a 20-minute or so video 6 days a week with everything I know, I want to be paid. $7.95, price of coffee. If you can't buy me a cup of coffee each day, don't do it. After that, if you want to go to a yearly subscription, stay with the monthly. The price goes up, but then we take it down if you go for the yearly. You might want to do that. In addition, I intend on offering a discount to current subscribers of my new online course. I'm finishing it up. It'll be any day. I wish I could give you today. Thought I'd have it already. I'm still at about 60%. That sounds to you a long way? It isn't. It could be a day or two. Maybe by Sunday it's all done. But I did decide that. Not for people that bought my charting course. You have to be a current subscriber, a paid subscriber, to get the discount. If you do that, I will offer the discount on that additional course. So, this is how it works. You go to our website, under the word research, it's all there. I'm Ira Epstein. You have a great day, and I will talk to you all tomorrow. Take care now.